Bank Negara has cut the overnight policy rate for the first time in almost 3 years as the country braces for a slowdown in economic growth. The central bank slashed its key rate today by 25 basis points to 3%. It last cut the OPR to 3% in July 2016, before raising it to 3.25% in January last year. In a statement today, Bank Negara said while domestic monetary and financial conditions remain supportive of economic growth, there are some signs of tightening of financial conditions. Among others, it highlighted downside risks to growth from heightened uncertainties in the global and domestic environment, trade tensions, and extended weakness in commodity-related sectors. The central bank is forecasting economic growth of 4.3% to 4.8% versus Putrajaya's projection of 4.9%. Meanwhile, inflation is expected to stay benign in the immediate term, mainly due to policy measures, including the price ceiling on domestic retail fuel prices. The ringgit, one of the worst performers this year, dipped to around 4.1497 against the US dollar after Bank Negara announced its rate cut. This was on expectations that lower interest rates in Malaysia will lead to capital outflow. However, Mizuho Bank told Bloomberg that any weakness will be limited, as there's unlikely to be further easing. Vishnu Varathan, head of economics and strategy at Mizuho in Singapore, reportedly said that Bank Negara's comment in its policy statement that the rate cut is intended to preserve the degree of monetary accommodativeness suggests it's likely to be a one-off calibration, barring a sharp downturn in global growth. The ringgit stood at 4.1475 before the reduction. Varathan was cited as saying that the ringgit is undervalued and expects it to drop to 3.97 to 3.98 versus the dollar over a 6 to 12-month period. For now, he believes a pair may test 4.20 until there's clarity on FTSE Russell's review on Malaysian bonds as well as Bank Negara's longer-term plans to develop the foreign exchange market. The US government has returned the first installment of funds recovered from asset seizures related to 1MDB under the DOJ's Kleptocracy Asset Recovery Initiative. Attorney General Tommy Thomas says the first tranche of returned funds, amounting to $57.04 million or 233.7 million ringgit, was credited into the 1MDB Asset Recovery Account, a segregated trust account opened specifically for this purpose. The sum was forfeited from Red Granite Pictures, a US-based film production company linked to Datuk Sri Najib Razak and his stepson Riza Aziz. To recap, the DOJ recently announced that out of the $4.5 billion wrongfully diverted from 1MDB, the value of assets that it is seeking to forfeit through its numerous civil forfeiture complaints filed from 2016 to 2019 is estimated to be $1.7 billion. It is now in the process of remitting a further sum of $139 million, which is the result of the sale of Jolo's interest in Park Lane Hotel in Manhattan. Glove maker Hartalega Holdings saw its fourth quarter net profit fall 22% year-on-year to 91.36 million ringgit on higher costs and a strengthening ringgit during the quarter. Revenue rose 11% to 683.89 million ringgit. It declared a third interim dividend of 1.9 cent per share. For the full year, net profit rose slightly by 4% to 456.2 million ringgit, supported by an 18% rise in revenue to 2.83 billion ringgit. Hartalega MD Kwan Moon Leong says the quarterly results were within expectations, particularly given the strengthening of the ringgit in a short time frame. He says higher costs for labour and electricity, as well as lower gains from forex, also affected the group's bottom line. Looking ahead, he says Hartalega's antimicrobial glove continues to see growing market acceptance and should contribute positively to earnings in the coming year. The group has also embarked on various cost optimization measures and automation initiatives to mitigate potential margin pressure. He is confident that it will continue to deliver sustained earnings. Park City Property Holdings and CapitaLand are undertaking a 50-50 JV development at Desa Park City called Park Regent. The 5.6-acre freehold condominium development will comprise 505 units spread across 2 towers. The project is set to be launched in the third quarter of 2019. Park City Group CEO Datuk Joseph Lau says the Park Regent features amenities including private lift lobbies for its larger units and powder rooms in all units to meet the needs of a diverse group of homeowners. Desa Park City was launched by Park City in 2002 and occupies a 473-acre site. It is a master-planned development which features homes as well as public spaces such as lakes and parks.